Hello traders, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of December 16th. Getting closer to Christmas, I tend to notice a little bit of, at least in the day trading, a little bit quieter market conditions, some lower volume, but usually not a bad time of year moving into the end of the year seasonally. But some things I don't like out there. So we're going to quickly go through the charts and the health indicators I look at. If you're ever wondering where this article is, because it gets updated each week, TradeThatSwing.com, go to stocks, stock market analysis, and trades, and you'll see the stock market outlook. So there are some lists you can check out, but we're going to talk about what some of the issues are that I don't love at the moment. So if we think of trading as you have a really good setup, really good conditions, you want to capitalize. You put more, you're exposing yourself more, you put more capital out there to take advantage of the conditions. So if under ideal conditions I'm deploying 100% of capital, when things aren't as good, it's a sliding scale. When they're kind of okay, maybe you deploy a little bit. You become more cautious. When things aren't good at all, you don't want to be deploying any on the long side. I would say we're kind of in the mediocre market conditions. I do not want to be heavily deployed at this time. And we can see a couple examples on this chart of what I don't like. So if you just look at the NASDAQ and the S&P 500 up here, these are large company indexes. They track the really big companies. And then they're also weighted toward those companies. Basically, the bigger the company, the bigger the weight in the index. So what can happen is if you have a few of these really big companies that are holding up okay, they can hold these indexes up even while a lot of other stocks, which we can see from these indices, are not doing as well. So the NASDAQ's kind of been chugging up. The S&P was chugging up in the last week or so. It's been a little more flat. But while that's been going on, we can see that NYSE composite, very broad measure of stocks, including stocks from all industries, all different sizes, basically anything listed on the NYSE exchange, it's been taken quite a tumble. Same with the Russell 2000, which is slightly smaller companies than what we get in these indices, and it's also having a bit of a tumble. The Canadian index also starting its pullback, but remains in an overall uptrend. These do remain in overall uptrends, so everything's in an uptrend, but we definitely have a divergence going on where we can see a lot of stocks are not participating in this most recent rally. That we would see if we just looked at the S&P 500, for example. Gold, do not like it, have not liked it for quite a while since we got this big drop. So lower swing lows, lower swing highs. This is downtrending behavior, not uptrending behavior. I'm not interested in it right now. Bitcoin has made a move back above 100K again. Really chopping around here, so we'll see how it does. I would like to see it pop higher, and then we get a pullback that holds above this little cluster here. That would make me potentially interested in. Right around 100K was my target from quite a while ago, so I got out, and I'm waiting to see how it acts here. Let's look at the market health indicators. S&P moving up. Threw up the percentage there just to show, hey, it's a great year, including dividends up almost 29%. It was supposed to be to the start of the year, but still right around 29% for the year. This was, the first day of the year back here. And yeah, so a really great year. Can't complain too much about that. The health indicators. So this is daily percentage movement, and I like it because when we get uptrends, they're characterized by lower movement. We don't get big sell-off days. when we get a big sell-off day, that warns of a correction or that something has shifted. So you can see it's very quiet right now, not too many big down days or anything. But when we start to get these down days, that's usually the start of a correction, or at least time to step aside for a couple days. Usually doesn't hurt at all to just give the market a little bit of time to have its drop, settle off, and then if it starts to rebound, maybe look to get in. But this is sign of more downtrending, choppy behavior, whereas this is uptrending behavior. So even though we have some divergences and things going on some of these indices and some problems with the health indicators, which we'll talk about too, at least for now, volatility is showing, hey, we're in not a bad position, at least based on this metric. Advanced decline line, I do not like. You can see S&P holding up here. The advanced decline line, which is advancing stocks minus declining stocks, is a cumulative number. It has dropped to this equivalent low. So that is a bearish divergence. So basically it's saying like, hey, the S&P, doesn't quite work that way, but the S&P could be down here and it would be in alignment with this indicator. They generally do move in alignment, and divergences, I would say more often than not, the advanced decline line wins. So that's what makes me a little more cautious as well, is that this is dropping. So unless it really starts to recover quickly, this is more likely to drop back toward that low. The upside volume versus total volume, not relevant at the moment. It's just a neutral, because you can see I'm looking for readings way up here or way down here, and we've just been in the middle. This is the number or the percentage of stocks above their 50-day moving average. 54% of all US stocks are above their 50-day moving average. 47% of S&P 500 stocks are above their 50-day moving average. So we're kind of right on that cusp, not ideal. Basically, it's easier to make money when most stocks are trending up and you're buying. And right now it's kind of like, well, some stocks are moving up, some aren't. It's kind of 50-50. Yeah, it's going to be, a little tougher to pick the winners. Ultimate indicator is basically how are you doing? The quality setups, what you've been looking at. If you're doing well and conditions are still good in those things that you're looking at, maybe it's okay to keep doing that. But if you're definitely noticing that a lot of these stocks aren't doing as well, then basically we're seeing it's a much more selective environment. You have a few stocks doing well and a lot that aren't. Sectors on the move, basically it's consumer discretionary and technology. I'll blow this chart up once I publish the article. Information technology here, consumer discretionary here. So they're top performers over the last 3 months, top performers over the last month, and over the last week, also the top performers. So that's where I'd probably focus most of my attention if I was going to look. And as we saw, the NASDAQ is doing a little bit better than those other indices, which have kind of flattened out. But things generally don't run against, if everything else is kind of dropping, yeah, we might get a sector that holds up for a while, but if everything else keeps dropping, usually everything ends up flushing out with it. So yeah, like I said, a more cautionary, very selective time, but these are the indices that are, or that sectors that are doing best. So I'm not really interested in taking any new longs, especially since we're kind of getting close to Christmas, close to the end of the year, lots of holidays coming up, a little bit of time off. I don't mind that. But if I was to take any trades, extremely selective, probably minimal capital deployment. I'm not interested in gold and Bitcoin at this point. Bitcoin I am if it keeps moving up above 100K, can hold there on the next pullback, and then if it starts to turn back up after that pullback, I might look at getting in. Always day trading an option, and that's a little bit more, every day you get some action, whereas the swing trading is more We have periods where we're active, and then we have periods where potentially, like right now, where we're backing off and may not have any trades for a while till conditions are good, or they really deteriorate, and then we can start looking at some short trades if you're into that. So that's your weekly outlook for this week. Have a great week out there.